Folks, what's up? I'm Steve, the Hands-On Angel. I am here with my good friend, Ben Simpson from Australia. This is not the first time we've physically been in the same room because we did it in Miami 4 years ago.
That's right.
When we did your last round. So Ben is the CEO and founder of Collective Shift, which is the Bloomberg for digital assets. And we're going to hear today about his story, how he got here, why he's in the United States sitting with me in Boston right now, and all the great things about the amazing company that he's building. So Ben, first of all, brother.
Thanks for having me, man.
Great to see you.
Yeah.
Great to be here.
It's a long flight.
26 hours?
I know, man. It's a long way away.
That's awesome. So tell me the origin story about you, how you get into digital assets, and how you became a founder. This is your second company.
Yeah, second company. So I quit school when I was 17. I think that's high school here.
Yep.
And I was an entrepreneur my whole life, loved building things. My first real company was a sportswear company. And we were sending tens of thousands of dollars to China every month. I was 15 years old, and the bank shut us down. They're like, who is this?
I wonder why.
Who is this 15-year-old sending money to China every month? And started on this journey of trying to figure out other ways of sending money and kind of, stumbled upon Bitcoin. And at the time, a friend of mine was a crypto YouTube creator.
Okay.
And he was doing content, and I started working for him when I was 17, 18, had no idea about Bitcoin. And, started helping him out with his business, and we ended up growing that to about 400 in Australian dollars. What's that about? Yeah, 4 million in ARR. It was like a digital, crypto education business.
Okay.
It was his.
No joke.
No joke. But I had no idea at the time, like when I started, what Bitcoin was, and then through working with him, I went down the rabbit hole of Bitcoin. Realized how
Got orange peeled.
Got absolutely orange peeled. Learned how it was just going to change the world. I took out a loan from the bank to buy Bitcoin when I was 18. Then told mum and dad. That was back in 2018. Fell in love with Ethereum. Bought Ethereum at $80, and then went and did every mistake under the sun that every crypto investor makes, which is no idea what you're doing, following the wrong people online.
Yep.
Losing. Oh
wait, YouTube is not where you learn about crypto and digital and Bitcoin.
I learned from YouTube, but it took me 6 months to figure it out. And you realize that 90% of YouTubers are there for the wrong reasons. They're just to take your money, right?
Right.
They're there to get you to click their affiliate links. They have some weird algorithm they're trying to sell you, and a lot of them are just are not giving really good independent information. Some YouTube channels,
because they're lead gen for the exchanges or the wallet
Correct.
companies or whoever's sponsoring their ad.
It's all about their incentives. It's like why are they doing what they're doing?
The incentives aren't aligned with the audience.
Correct. Yeah. And I used to work for a crypto YouTube influencer, and I saw what it was actually like. These YouTubers sign non-disclosure agreements. We never did this, but we got them all the time from the cryptocurrencies to sign a non-disclosure agreement to promote the altcoin or cryptocurrency on the channel and not tell anyone, and then they would just dump their tokens into the people that's watching the video.
Yeah.
So just like pump and dumps. That still goes on today.
Right.
So you don't.
And that's bad, right? That's not.
Look, last time I checked.
That's not good. Okay, so sending money to China, bad. Pump and dump scams on YouTube, bad. So we've established bad right now. Okay,
right?
good.
And
there's a pattern here.
There's a pattern here, right? And I wanted to teach people about Bitcoin and crypto in the right way, knowing that 95% of this space is crap. It's a nightmare. But it's really matured over the last few years. The Bitcoin ETF, the fastest growing ETF on the planet. Over 580 million people across the world own digital assets now.
Yeah.
58 million people in the US
out of 300 million.
Own Bitcoin.
It's a lot.
There's more people that own Bitcoin than own gold, and
that's an interesting stat.
Yep.
How many people own gold?
35 or 36 million people own gold.
That's nuts.
Yeah.
Which has been around a long time.
Correct.
Yeah.
But again, the size of Bitcoin is only 1/10 of the size of gold.
Okay.
So we're still in this growth phase. I mean, the government here have the digital asset strategic Bitcoin reserve. They've got 1% of the Bitcoin supply.
I was going to say, number one or number two Bitcoin holder in the world is the United States government, right?
Yeah, they're in the top 10. I'm
top
not sure.
10.
Yeah, I'm not sure which number they are. I think Satoshi is still the number one.
True.
But yeah,
and Michael Saylor's in the top 5 too.
He'd be going up. He's buying more and more because cash is becoming less and less valuable. It's a depreciating asset when you think about the inflation and cost of living and everything's going on. The US is in $38 trillion worth of debt. That's only going up, the fastest it's ever been. So the purchasing power of the dollar just devalues.
And for people that don't understand that, I just tell them, remember 3 years ago how chicken was $4 a pound? They go, yeah. I go, now it's $11 a pound.
Correct.
That's the best example I can give people. And it's the same chicken.
Correct, it's the same chicken, and has your job increase the salary at the same rate? Absolutely not.
No.
Are you doing more work? Absolutely. So that is the way off.
3 to 4% increase typically in wages versus 8 to 10 on inflation.
Correct.
Yeah,
And
it's
some
just
things
not keeping up.
It's not keeping up. So Bitcoin is a hedge against that. It's a digital gold, but it's so widely misunderstood because you've got Ethereum, Solana, meme coins, AI, you got all this other stuff, digital assets, you've got stable coins, you can earn a yield. It's DeFi. There's so much stuff, right?
It's confusing as shit.
It's so confusing. And for so many people, they have no time to figure it out.
Yeah.
They know they need to think about it or be investing in it. So they watch a couple of YouTube videos, follow some guru online, and then lose a bunch of money. That's kind of how it happens.
And then they get smart.
And then they get smart and they realize they need support and they need to find somewhere that can actually guide them through that journey. And that's the company that Collective Shift is. The vision is the Bloomberg of digital assets, with really a far more, like, I would say, human approach to actually helping people guide them through. So we take the approach of AI-powered tech, AI-powered research, education, to have the tools to get what you need instantly with the human element.
Okay.
So you've got people you can speak to, coaches, client success managers, you can actually guide through the process so you can trust what's actually happening below the surface. So that's the journey we take people on. You know, we've grown really significantly out of Australia and now focusing really here in the US.
And you started this company 4 years ago?
Yeah, I think we're 5 years ago now. So we did
Okay.
our pre-seed 4 years ago. We're doing a couple of $100,000 of revenue. We've grown to 5.2 million now ARR, and North America is our fastest growing continent. And
So what is the product? If I'm a Collective Shift client,
Yep.
what's the product that I'm buying? What am I getting?
so you sign up and you get your own, we have our own app, our own dashboard, our own platform where you start and you get onboarded through the journey of basically a personalized education route depending on what you need.
Okay.
So Steve, you show up, you sign up, you're like, okay, I want to buy Bitcoin through my IRA. I want to earn some income on my stable coins, and hey, I've got some Ethereum and I have no idea how to stake it. Great. So you're going to have your clients,
Or even what staking
or
is.
what the hell even that is, right? So you're going to have your client success manager, and they're going to then build out a personalized game plan for you, and we walk you through each step of what you need. So we'll get you set up with the IRA. We'll get you set up with actually being able to move some of your crypto from, let's say, Kraken or Coinbase onto a DeFi platform. We'll set you up with that, and then you can start to earn income. And we do that through interacting through our platform. We then have group coaching. We have one-on-one coaching as well. And then you have the tools and AI access to our data and our research where you can start to ask questions about the market, about what to buy, when to sell, when to get in, when to get out, what's happening with your portfolio, all inside our own platform.
So you're doing what Bloomberg does for the public markets, stocks, real estate.
Yep.
You're doing it for private markets and for digital assets.
Correct.
Yeah.
Correct. And I think where Bloomberg, have done really well is, they've got a very, very data-heavy, enriched platform where you can pretty much get anything you want.
Right.
What we do, which is different to Bloomberg, is we help people that are time poor. Like, we help professionals. Like, Steve, you don't have 30 hours a week to sit down and look at the crypto charts, right?
No.
You're busy.
Nope.
You want to be able to log in, 20 minutes a week, 30 minutes a week and go, what the hell is going on with my crypto? Should I be buying now? Should I be doing anything? What's going on? So you can log in and see exactly what you need that's consumer facing. So you have a product that's just helpful. And if you need some support with something, you can just book in a call with one of our coaches. So you're getting that guidance, that coaching. It's kind of like wealth advisory meets Bloomberg.
But the differences between a lot of the platforms out there trying to do this is you're not touching the money. You're not an investment platform.
Right.
You're not an exchange.
Right.
You're not affiliated with them, meaning you don't touch the money. This is literally guidance and coaching of what to do,
Yeah.
and then the client actually executes on it.
Correct. So we can be completely independent. That means we can give the best insights, the best path to success with no affiliation. Whether we help people avoid FTX when that blew up. We're helping people find the right platforms so they don't get scammed. Like, we're completely agnostic. We sell research to some like Coinbase back home in Australia.
Sure.
We have exchange partners where we plug you into, but we're about getting you the result. We want to make sure the client gets the best result, and we're incentivized to do that. That's how we work. That's how we think.
Makes total sense. And the company, 5 years old, when we first met, you were doing $250,000 in revenue. You finished the year at 5.2 million?
Yes, we did 5.2 million last calendar year.
That's awesome.
We started, expanding into the US about 6 months ago to start.
And that's, I'd say, a lion's share of the revenue is not even in the US, which is the largest market in the world.
It's about 70-80% Australia at the moment. So we just started in the US.
Australia's like the size of this table.
It's about,
You built a $5 million company in Australia.
It's mind-boggling coming here and seeing how big this this country is in comparison.
So help me understand. Obviously understand the size of the U.S. versus the size of Australia. What does that mean in the digital asset space as far as spend, yield?
It's tiny. So I think we're a little over 2 million people in Australia own crypto.
Okay.
The amount of those that are active would be very, very little. Australian investors are very property heavy. So that's 2 million compared to 52 million here in the US. It's
and growing.
And growing. And the Bitcoin ETFs and things aren't that widely adopted in Australia. Here it's very heavily adopted. People are really pushing, exposure through the Bitcoin ETFs. Crypto is, Coinbase is here, Kraken's here. You've got very native crypto tech-minded investors here. And, back home in Australia, it's a little bit protected for investors. Property's heavy. Crypto's not as, prominent, I guess. But we've got customers from 45 different countries. And yeah, it's brilliant. I mean, crypto is global. So, what is relevant here is relevant in Indonesia or Dubai or UK. It's all relevant. So,
and the funny thing is you built in all those other markets first and now you're here. So boots on the ground here, what is the plan for the US? Now that you're here, what are we going to do?
Yeah, so first things first, we've just brought on 4 salespeople. We've got sales manager, marketing manager here to kind of help us grow, boots on the ground, and keep our marketing engine growing. The biggest bottleneck for us was we just didn't have enough people here to be able to take the calls. We're getting, a lot of leads, but we had no one being able to take the calls and actually help point the clients in the right direction. So that was the biggest bottleneck unlocked by being here. And yeah, our acquisition engine is growing rapidly. So it's about, first goal is to keep building the brand, build the consumer-facing product, and then being able to build that like Morningstar front end and then have the B2B partnerships on the back end. So the next step is the B2B relationships where we're able to plug into wealth managers, tax providers, Fidelity, BlackRock. Like these are the big institutions that we can plug into and
who need this data.
Correct.
Because their clients are asking for it. The clients are asking for this problem. Like one of the challenges, because I have some friends that are RIA managers, and 3 or 4 years ago it was, well, our clients don't want it and we don't get paid on it, so we're not going to talk about it. That's not happening now. Now the clients are coming to them going, look, there's this ETF out there. I need exposure to digital assets. I'm not going to put 80% of my money in it, but I want 3 to 5% exposure. And your job as my wealth manager is to get me that exposure. Correct. Then the RIA manager sits there and goes, I don't know anything about this. Shit, what am I going to do? And you go, hi, we're over here.
Yes, correct.
That's it.
That's it. And then we want to plug into those platforms. So they have their own interface, like with our, we call it Shift AI. So it's our proprietary AI platform with all of our data and research and insights from our analysts. And we scour the right places to kind of cut through the noise and give the right insights for, whether it's a customer or a B2B provider. Then they can work with their clients, talk to it, get exactly what they need, which platforms to use, what to avoid, how to integrate it, all from your own app.
So outside of B2B, if we talk about your core customer on the consumer side, who's your core customer? Give me a demographic. What do they look like?
40-year-old male that is a professional, high-income earner, usually earning at least $150,000 plus, $200,000 plus, that is looking to invest $25,000 up to usually $500,000 in the digital asset space. Okay. So that could be Bitcoin, that could be Ethereum. They could already have that invested and they're looking to optimize it, or they're just looking to get some exposure into the space. So they are usually already either orange pilled or halfway there, and they're looking for someone to actually.
Or they're a family office that says, we've already done all the stocks, real estate. I can't have any more of that. There's too much exposure. Correct. I need this. I just don't know what to do, and I don't want to get killed.
Correct. And that is where we've got a big family office on our cap table. Like they invest a lot of money into digital assets. They need support, guidance. These family offices. And
they don't want to manage it. No, they want somebody to tell them what to do.
Correct. Exactly right. And so many more people are now looking to get exposure into Bitcoin because of everything I just mentioned before. And over 100 public companies in the US have Bitcoin exposure on the balance sheet now. It's
and they're not all owned by Jack Dorsey.
No, correct. It used to be. And it's expanding at such a rapid rate.
It's such an unlock because these public companies, now that they can legally do it, which is great, these public companies have massive amounts of cash on the balance sheet, and they're like, well, we could do convertible notes, we could do share buybacks, but they look at it and go, they could put it into mutual funds, but then there's this asset over here, Bitcoin, that on average in the last 10 years has grown 100% year over year. There's no other asset that's grown more. And even if it goes from 100 to 80%, there's nothing in the public markets that looks like this.
Absolutely not.
So for them to take a percentage of their cash and to put it in a digital asset like that, that's going to continue to go. It's absolutely a strategy that every public company should be looking at.
It's a no-brainer.
It's a no-brainer.
It's an asymmetric upside asset. Like, the possibility where it could go as a limited supply asset with all the capital that's going in it is massive. But the downside risk is it's never had a day off in 15, 16 years. It's the most secure blockchain in the world. It's now literally backed, you could say, by the US government. Like, it is, it's not going anywhere.
Yeah, I think the argument that it's going to zero is gone.
That's definitely
the only
going.
question is, where's it going?
Yep.
Could it go from 75 to 50? Absolutely. Could
Yep.
it go from 50 to 500? Absolutely.
Correct. Yep.
I think, but the argument of it's a sham, it's going to zero is over.
Completely gone. I mean, Bank of America now advise their clients up to 5% allocation to Bitcoin.
That's insane.
Like,
Which is the most? It's the biggest bank in the United States.
Yeah.
Probably the most conservative, and yet they're advising people on Bitcoin. I'm a Fidelity client.
Yeah.
I've bought the ETF through Fidelity.
Yep.
You can buy Bitcoin directly in Fidelity right now.
Yep.
Not through your IRA yet, but that's coming.
Yep.
You would have never thought Fidelity, Vanguard, BlackRock. You could buy Bitcoin right through them.
No, no, it's wild. And there's just a big gap of knowledge and understanding and confidence. People are overwhelmed. They don't know who to listen to. They don't know who to trust.
Right.
They're seeing all this crazy stuff online, and there is a missing trusted premium partner in the space that's independent that can guide people through it. Think, Bloomberg, think Morningstar, like all of these brands in the traditional financial space have built massive, platforms because there's so many people that need to learn about that.
Sure.
That does not exist in crypto right now.
That's insane.
Yeah.
So what's the next 5 years is hard. What's the next 2 years look like for you here?
Really boots on the ground is just driving more and more adoption here. Partnerships, I think the big one is launching our Shift AI platform. So it's in beta at the moment. We use it internally as our analysts. Like literally the way I use, Claude or my own AI tools is like from the hand of your phone. You can talk to it. What's going on in crypto today? And you could do that with ChatGPT, but the data is from everywhere. This is independent, curated data and insights from us. So you know that all the insights are, are relevant, independent, quality, and then they also map to you. So you have your assets that are in the platform that are, plugged in from your wallets, your Coinbase, your Kraken, and then you can literally ask the AI questions about your portfolio that's relevant to the market right now. So something happens overnight, the market drops, you can see what's happening and what's relevant to you, some things you could be doing with your portfolio. And then benchmarks against all the other customers we have. So the data is within our ecosystem. So you, Steve, can see how you're actually benchmarking against other clients.
Right.
And what they're doing, and that's
and outside of growing the U.S. market, which is a massive opportunity, it's time to raise again.
We're raising. So we're doing, 4 years ago we did our first pre-seed.
Yep.
We've essentially kind of bootstrapped the growth of the business until this point. We're growing 200% year over year. The acquisition engine's locked in, but we want to go faster and harder. Like the model works. It's about pouring more in now.
So outside of the round dynamics, what does capital unlock for you? Like why raise? What is this going to unlock for you?
It's just faster growth. Like we have the acquisition engine. We're doing some really good, ROAS to first year CAC on the front end. Our renewal rates are really solid. Like our ARR is growing. We do really good margin in our business as we grow and scale. And for us, the model has been consistent over the last 8 months of our acquisition engine every single month, and it's plugged into the US. It's now working, and now we just want to add more fuel to the fire. It's simply just being able to grow faster and capture more market share.
Are there markets in the US that you think are hotter for this space? For example, Miami, which is a pretty crypto native market. Are there certain markets you're targeting or looking at?
Not necessarily. Like we find again, we're kind of taking the lens of we're looking for a certain person that is in digital assets. And when you look at the who owns Bitcoin digital assets, it is a wide range of people.
It's true, actually.
You've got people like local school teachers, the mums working in school. You've got tech IT guys. You've got big investors. Like it's funny how crypto again it decentralizes things. It's kind of like you could have any sort of profession. For us, it's more so people that are looking to protect and grow their family's capital. They want to be able to own Bitcoin and digital assets and do it in the right way. They don't want to screw it up.
Well, because unlike things like startups, for example, in the United States, you have to be an accredited investor, which means you have to make at least $200,000 in income or have $1 million net worth outside your primary residence. That doesn't exist in Bitcoin. You also don't have to buy an entire Bitcoin. People are like, well, I can't afford a Bitcoin. I'm like, well, you don't have to buy a Bitcoin. You could buy half a Bitcoin, a quarter Bitcoin, a tenth of a Bitcoin. That's the advantage is if you have $10 or $10 million, you can still participate.
Correct.
Until it's all gone.
Correct. Yeah, well, there's only a million. The 20 millionth Bitcoin was mined just recently.
So it was?
Yep. So there's only a million to go.
Oh, wow. I didn't know that.
Yeah. And the other thing is like DeFi, right? Like, I don't know what people earn in their bank right now. I know, 3-4% sometimes, depending on like the interest rate you get in the bank.
If that's a good bank.
That's a good bank. With DeFi, you can be earning up to 10% on some platforms and, do it really securely using like, Ethereum and, even Coinbase. You can start to earn a yield on your assets. So, yeah, it's really
just like
cool.
a bank does the same thing with deposits, right?
Yep, same thing.
No different.
No different.
They're just taking those deposits and levering them up to get a return.
Correct. Yep. Yeah. The only difference is the banks use rehypothecations. They just print money out of thin air. They'll take your deposit and they will multiply it literally out of thin air. They'll keep so if you deposit $10,000, they'll keep $2,000 in the account and just start loaning like.
It's so backwards.
Tens of thousands out. It's literally like you cannot go to the bank and just ask to get $100,000 out in cash. They don't have it. It doesn't exist. It's all just numbers on a screen.
It's true, actually.
Yeah.
That's actually pretty fun. It is pretty hard to get money out of a bank.
You can't. In Australia, you can't get more than $2,500 out of the ATM, or
No, you can't. Yeah. Same thing here. I think it's $500 or $750 a day, and I think it's a $2,500 a week.
Yeah.
And I'm like, but it's my money. If I had $100,000, I'm like, give me my money.
They won't let you because it doesn't exist. That's the thing. It's all numbers on the screen. There is not $38 trillion worth of debt for no reason. Like it's literally printing of the money printer.
All right, so I'm going to tell this story. This is a pretty fucked up story. You'll love this because it's all about the banking. So in the U.S., we had the banking crisis, the bank run in 2008, when literally all the banks almost went under. Bank of America, and most people don't know the story because it was behind closed doors. But I was working at a publicly traded company. I was a vice president there, and the CFO of the company came in and talked to us. This was after 2008. And we were talking about his view of what we learned, especially from the banking system and all the rules and regulations now that are in place to not allow that to happen again because of the private credit, what they were doing with mortgages. And we were talking about how close did we get to having sort of this, almost like a depression 1939 crash. There was a weekend where Bank of America and the other major three banks were about to go under. And the head of the Fed at the time called, I think, the 10 largest companies in the United States, including the one that I was working at, Apple, Microsoft, et cetera, and said, there's a chance that Bank of America and some other companies might go under this weekend. We need each of you to, if we call this, we need each of you to write $1 billion loan to the government for us to backstop the banks, and it was 10 of them, so it was $10 billion to be able to float the loans to make sure they got through the weekend. Now, they said, this is if it needs to happen. We don't think it will happen, but if it does, we want to have this capital reserves that the U.S. government could call from these publicly traded companies. Yeah. And everybody signed up to do it. It never had to happen, thank God.
Wow.
True story. He told the story. He goes, it never happened. He goes, that's how close we got, not just for Bank of America, but most of the major banks in the United States going out of business in a single weekend.
So that the first block of Bitcoin in the blockchain, it's hard-coded the newspaper clipping of the 2008 banking crisis. That was the reason Bitcoin was created.
It was.
That is a crazy story.
Isn't it fucking crazy? I'm like, that's nuts. And of course, I'm a B of A customer. I have been for like 25 years. I'm like, that's how close we came. And it's another reason why you don't want to have all your eggs in one basket. You want to divert. My son, this happened last week. He's young. He's 25 years old. His bank account got hacked. Someone stole Bank of America, $7,000 in a span of minutes stolen from him.
Wow.
Now, kudos to Bank of America because they opened up a fraud case immediately. They stopped all the transactions. They're refunding his money. They did everything by the book, which was great. But I said to him, because they issued him a new debit card, but it was going to take 5 to 10 days. So for 5 to 10 days, he had no access to money, couldn't use Venmo, can't use Apple Pay because it's all tied to his fucking bank account.
Wow.
So I said, here's the reason why you want, and we had a conversation about diversification, not just of banking, but of all money.
Yeah.
And digital assets are just another form of diversification. That's all it is.
Correct.
It's no different.
Yeah, you can't. I mean, the banks overnight can lock you out. Happening in somewhere recent, might have been Canada. They were the truck drivers were having some big protest, and they were protesting the government. And the government said, "Well, screw these guys. We're just going to." They just turned all of their bank account access off.
I saw that.
Like, that's wild.
And they're like, that's my money.
That's like, now what do you do? Like, if you think about it, like if you genuinely couldn't access your money, it gets pretty bad pretty quick.
Yeah, to me, I look at it, and this isn't. I'm one person. This is not financial advice, by the way. I want to make sure I say that. To me, Bitcoin is a hedge against inflation, and it's digital gold. It has all the same properties to me. No government controls it. I could take it across border. It's not tied to the dollar. It's not tied to any government, and it's a hedge. But I also have no interest in selling it. I have no interest in trading it. I'm not levering it. I'm basically just buying it and sitting on it. And I don't think, I'm not saying that's the only strategy, but it tends to be my strategy. But I look at it and go, someone has to show me in the last 10 years, and I've owned, I want to say not a lot of different types of investments, from stocks, real estate, gold, wine, art, startups. I can't find an investment in the last 10 years that I've had that's performed better than Bitcoin.
No.
I just can't.
No, it's one of the best. Well, it probably is the best over the last 10 years. I mean, unless you're getting in early in like some sort of startup and it goes public or whatever. But
correct.
Yeah, it's because it's completely decorrelated. It's its own thing. It's decentralized. It's not correlated with the the U.S. government. No one can change it. No one can control it. No one owns it. It is a completely decentralized, autonomous asset. It's beautiful.
Right. So we're going to grow from 5 million to 10 million probably in the next 24 months?
Yeah.
That's the goal?
Hopefully 12, but we'll go.
12 million. I love it.
I think we can do it. And then push on to Series A and beyond. And then really the goal is to be the number one in the world, not just Australia.
It's fantastic. Ben, if people want to learn more, where can they reach you?
They can probably best is either on my Instagram, Ben Simpson AU. I've got YouTube, Twitter. Just search Ben Simpson Crypto. You'll find me.
And if they want to find out more about Collective Shift, what should they do?
Yeah, go to the website, Collective Shift. You can check us out there. We've got a bunch of information on how you can join our newsletter and look at all our free content, or follow me on socials.
Fantastic.
Legend.
I look forward to seeing what happens, brother. This is awesome.
Man. Appreciate it, bro.
Thank you, brother. Appreciate it.